Ramky Infra. They won a few orders from various states and across various business segments worth 1,250 crores. M. Gautam Reddy, Executive Director of Ramky Infra, joins us right now on the show. Congratulations, Mr. Reddy. Thanks so much for joining in. Congratulations on these orders. Tell us, this is a mix of 3 or 4 orders, if I'm not wrong, from various states that you won, Bihar, Gujarat, MP and Tamil Nadu as well. One, what does this take your overall order book size to? And does this run rate continue over the next couple of quarters, or do you think orders will now start drying up?
Firstly, this is a good mix of orders from different regions and different verticals, and the philosophy of the company, which is sectoral and geographical diversification, continues to be maintained, which ensures that the risk is quite well balanced between verticals and the regions, so that the political instability or the sectoral disturbances don't impact the company. The total order book as of now reaches about 14,200, 14,300 crores, which gives us good visibility for the next 3 years of revenues and adequate growth that the company has plans.
But what about going forward? I mean, do you expect orders to come in from irrigation, civil construction? What is the kind of order mix that you propose to have or you target?
I think the first good sign that you would see from the order books is that we have got more than 300 crores of irrigation order book in the current 1250, which is a good sign. This is coming mostly from Madhya Pradesh and West Bengal. And I think on a long run, the country is going to spend a lot more on the irrigation infrastructure, which will be good for the rural economy, and we believe this will continue to grow, and it's much required, needed infrastructure for the country. Obviously, the roads, water and the building segment will continue to flow in order, so I really don't see any problem in terms of order inflow. The macro environment seems to be doing quite good in these regards.
Mr. Reddy, just wondering, what's the overall financing cost that you as a company are getting? Because the belief after the 50 bips cut by the RBI was that some of it would percolate down to the core sector as well. And from what we gathered, that really hasn't happened. So financing costs remain high. Is that true? And what's your own financing cost?
Financing cost surely continues to remain a little high. Right now, we are hovering between 12 to 12.25 is what I would say. But post the RBI cut, there is a marginal reduction, about 0.25 basis points has come down on different banks have transferred about 0.25 basis point, not 50 basis points. But still, infrastructure as a sector requires a much better financing cost, because at this rate of interest, the chances of making margin will keep going down.
Okay. So let me ask you, on a 14,000 crore order book that you have, based on what you did in FY12, what's the quantum of growth that you envisage for your company in FY13, both on the top line as well as, if possible, if you can mention it on the bottom line as well?
Well, at this point, we don't have a clear guidance, but historically our growth rates until FY11 have been upwards of close to the 40%. FY12 is going to be slightly tapered, obviously, because of the scale. We have already reached close to the 3,000 plus crore scale, so obviously it will scale down, and it will still be very robust, much higher than the sectoral and the country average. I would expect it to be upwards of 20% growth rate in the current year also.
Right.
In both in terms of top line and bottom line.
Sure. Any foray in the railway segment?
Not yet. We haven't looked at, but we are looking at that as a sector. We're looking at mining and power EPC are sectors that we are looking at diversification. But as of today, we haven't yet really got into this.
Is there a timeline on when you would fructify plans and where additional growth will come in from, aside of the numbers that you just highlighted?
Our philosophy continues to be sectoral and geographical diversification. In terms of geographical diversification, the new area of focus for us will be the Middle East and Africa, where we continue to look for some opportunities which are looking quite promising at this stage. And in terms of sectoral diversification, as I said, we are looking at rail, mining, and the civil works of the hydropower projects as some of the new sectors that we believe could provide opportunities. We are waiting for some of these opportunities for partnerships and relationships to grow, but hopefully in the next 12 to 18 months we can see some diversification in these.